Hey everyone, welcome back to another dividend investing video. As we wrap up the month of September, it's time to post an update on our publicly shared dividend growth income portfolio. But this video is a little more special. This marks the 1-year anniversary of building up this account from scratch. That's right. I started with like $200 1 year ago. Every single week I added a little bit more money and made consistent purchases of high quality dividend growth stocks and ETFs. And today, this is a 5-figure account that is paying a growing amount of dividends every month in just this one short year. This makes a good time to go over how we got there and more importantly, where we are going. This is something that anyone can do. And we have a lot to cover, so let's get into it. I'm Nick, and this is the Dividend Growth Income channel. Thank you for joining me today. I'm not a financial advisor or guru. I'm just a regular guy who wants to share my love of dividend growth investing and building financial independence with passive income. If you could, please do me a favor, smash the like button and subscribe to keep up with future videos. This helps us out more than you can imagine with the algorithm, so we can bring you more quality dividend investing content. So yeah, 1 year ago I started this new account with Fidelity shortly after I started this YouTube channel. This is a means to demonstrate one way of building up an investment account that pays out a stream of growing dividend income. Now, I didn't use a lot of money to get to where things are now. This account is now over $13,000. And the idea here is that I'm dollar cost averaging into a set of ETFs and dividend growth stocks every single week. These are mostly companies that I'm bullish on for the next decade that have an established track record of paying that growing dividend. Now, I've selected Wednesday as the day I make my purchases, and the idea was to keep emotions out of the investing process here, and that's easier to do when you just designate a day to make your purchases. Now, a few times I saw opportunities to throw an additional $50 in here or there, and I did. And I'm going to be doing more of that sort of thing. But the idea is I have a system in place. Okay. I'm going to bring us into the spreadsheet I'm working on to track my account nicely and display it here for you guys. So today our account is valued at $13,323.42. Performance is about flat overall for the year. September has been probably the worst month performance-wise for this portfolio, at least in 2023. Now, while we're down $88, my cost basis of $13,411 includes the over $200 this account has generated in dividends thus far. And I'm realizing I could probably display this a little better, so that's something I'll work on for next month's video. Because what I've really contributed into this account is $13,250. Now, right now, the portfolio yield is at 3.31%. Most of the stocks have declined in the last month, bringing this yield up. And look, in this last 1 year with weekly contributions, I've got a dividend account paying me $441.16 over the next year. This comes out to about $36.76 on average per month, or $8.48 per week on average, or $1.21 per week. So what can I really do with this? It's not really a lot of money, right? But I can go to Kroger every day and buy one of these 2-for-1 snack bags. I'll get a Cheetos and a Funyuns, and that costs $1. So I've put myself in a position to get my daily serving of Cheetos and Funyuns and get that snack kick out of the way. Maybe that's not very impressive really, but it should be obvious how this is going to scale, right? And here are the goals I have mapped out for this account. The ultimate goal for this particular account is I want to get this to generate $1,000 a month in dividends. It's going to take some time, several years, but that's why I've set up many goals along the way, milestones that let me mark my progress. My first was just to get this account paying out $100 a year. More recently, we passed that $1 per day average, where I can now afford my daily Cheetos. Now we're headed towards that $50 per month goal. We're getting closer to that being more than 73% of the way there. And then my goal for the next year, I have typed out, is to get that $100 per month threshold. I think that's a reasonable goal, and I've got about 15 months to get there. And I'm not going to be chasing yield to do so. I am in fact preferring the stocks that pay between 1.5 to 3% yield with higher dividend growth, because this account does have some time on its side before I actually need to use this income to pay bills. It's just going to reinvest. I'm just letting these dividends directly reinvest, and I'll show you the dividends I received this month here pretty shortly. We have a record month for September, but first, let's look at the purchases I made. Here is my contributions page where I simply track all the money I add to the account, and I have a goal set here. I'm a little behind on this goal, and in truth, I might only get to about 90% of it, but that would mean I invested $14,000 in the year 2023 just in this account, and that doesn't suck. All year I've been adding $250 for each Wednesday, and a few times I added a little extra when I had some extra money to invest or I thought the markets posed some opportunities. At the middle of the year, That's when I bumped this goal up from 10,000, which we've already met by now, and aimed ambitiously for 15,000. So starting in September, I began contributing $300 a week to the account. And I've done the math, okay? And I've committed to get that amount in for the rest of the year. And if I do that, it's going to hit over $14,000 contributed in 2023. I would like to try to get 15, but we'll see what happens. Either way, I've truly already met my initial goals here, so I'm happy. So here is what I bought. On Wednesday, September 6th, I added $300 to the Fidelity portfolio, and I bought $50 of each of these 6 stocks. Agri Realty, ticker ADC, Automatic Data Processing, ticker ADP, Kroger, ticker KR, Lockheed Martin, ticker LMT, United Health, ticker UNH, and Waste Management, ticker WM. Then on Wednesday, September 13th, I added another $300. It was split between these 6 equities, $50 in each. The Schwab US Dividend Equity ETF SCHD, the Vanguard High Dividend Yield Index VYM, and the Vanguard S&P 500 Index Tracker VOO. I also added Agri Realty and Kroger again, and then Amgen, ticker AMGN. Okay, then on Wednesday, September 20th, I added $300, split it between 10 different equities, $30 in each of these, okay? SCHD, VYM, VOO, Snap-on, ticker SNA, Vici Properties, ticker VICI, Next Year Energy, ticker NEE, Main Street Capital, ticker MAIN, BlackRock Inc., ticker BLK, and more Lockheed Martin and Agri Realty. And finally, the last $300 invested was on Wednesday, September 27th, split between these 10 different equities. More SCHD and VYM. Then I added Procter & Gamble, ticker PG, Home Depot, ticker HD, Cisco Systems, ticker CSCO, and Broadcom, ticker AVGO. Also, more Next Year Energy, Lockheed, Agri Realty, and Vici Properties. What can I say? Real estate, it's on sale right now, and I'm really bullish on both Agri Realty and Vici Properties. And now for the fun part, dividends received in the month of September, and as mentioned, it was a record month for the account. The majority of my holdings do pay out March, June, September, December. Hey, and let me know down in the comments, is your portfolio the same way? Are you also heavier on these 4 months? Now, I do have 2 monthly paying stocks in this account, Agri Realty and Main Street Capital. Those are definitely nice to have. Monthly income is pretty sweet. But I don't suggest buying stocks just because they pay a monthly dividend, by the way. So on the first day of September, I received 2 dividend payments, $2.85 from Kroger and $1.75 from Aflac, ticker AFL. Then on September 8th, I received $3.34 from Amgen Inc., ticker AMGN. On September 11th, I received 2 dividend payments, one from Snap-on, ticker SNA, in the amount of $1.86, and then Chevron coming in at $4.46. Then on September 14th, 2 dividend payments, $2.28 from Home Depot and $1.86 from Agri Realty. On the 15th, $3.48 from Next Year Energy, $2.23 from United Health Group, ticker UNH. On the 20th, my Main Street Capital dividend hit. That was $2.42. And on the 21st, I received my VYM ETF dividend payment in the amount of $9.31. On the 22nd, I received 3 payments. That was $2.27 from BlackRock Inc., ticker BLK, $3.12 from Lockheed Martin, ticker LMT, and $2.07 from Waste Management, ticker WM. Then on the 25th, the largest dividend payment this account has received thus far from SCHD in the amount of $11.31. And finally, Broadcom came through on September 29th in the amount of $2.19. So all in all, that comes out to $57.30 in dividends for the month of September. So for 1 year of building this account, all things considered, I'm quite happy with this. Because I know that if I just keep doing this, this is really going to build up into something substantial. Now, I know some might look at this and think, whoop-de-doo, Nick, $57. Well, your account actually lost $500 in that same month in value, right? And this takes me over to my performance page. And yes, the account had its worst month this year, losing nearly 4% of its value, more than $500. It does give you some perspective, but what this has allowed is for me to lower my cost basis and lock in higher starting yields. Look, the market's going to swing in both directions. I'm not in the business of predicting that. What I can predict is that this amount right here, my forward annual income, it's going to increase by 3 different ways. The largest it will increase by is the purchases I make. It will increase because all these companies are increasing their dividend payment each year. At least that's what they've been doing so far, and that's why I've been purchasing them. And lastly, it's going to increase because the dividends brought in are used to directly buy more of these same exact stocks that pay the dividends. So it creates a situation where your dividends end up making you more dividends. So even if I left this alone, stop contributing to it for the next year, I can rest assured knowing this forward annual income amount is going to increase on its own by those two other ways. And what the value of this account does in the short term, I really have no idea what it'll do in the next year. And as a dividend-minded investor, I can't be too concerned with that. Look, I'm going to look at downswings as a chance to lock in higher starting yields. And I'm going to look at the green days as a day to appreciate my hard work paying off and making some money. So with that context, let's look at the holdings in our account. So this is the page I created that lets me sort all of my holdings by these various columns. Right now, I'm looking at this with my heaviest first. As always, my top 3 positions are my 3 ETFs. I wanted these to form the foundation of the account, taking up about 25% of the weight. Then I have this mix of about 21, 22 dividend growth stocks I invest in from time to time. My top 5 positions right now, the stocks are United Health Group, Kroger, Agri Realty, Lockheed Martin, and Chevron. I think that is a solid top 5. Hey, let's sort this by performance. My top performing stock has been Broadcom. In fact, I only recently started adding to it again as it's dropped a bit from those highs. At one point, I was up over 50% there. Comcast has also been quite a steady performer for me. I wish I had bought more of that one earlier. I still think it's a pretty decent buy right now, though. So since this is the 1-year anniversary, let me give you kind of an overview of how I built this up. I really started dollar cost averaging into most of these equally for about the first 6 months, until I got about $250 of value invested into each one. Then I started to be more opportunistic, okay? Focused on the ones in this list where I saw value. So having a large group of stocks like this, now I can usually find 1 or 2 or 3, a couple that are going to be more appealing and attractive at that given month. And that's where I'm going to focus heavier. For instance, this month, I've been buying a ton of Agri Realty and Lockheed Martin. I'm down on both of them, but I believe long term that's going to pay off. In fact, let's sort this in the other direction by my worst performer. Interestingly, I'm about 50% red, 50% green. My worst performer, and this is new in this last week, it's Next Era Energy. I've been buying a lot of this one too. It's the lone utility I have in this account. I think one thing I'd like to do over the next year is probably add another utility into this mix. Although I don't want to be heavy on utilities. There's not much growth there. It's really just income. Now, I'm a believer in Next Era Energy. They are down on the news that their subsidiary, where they have a substantial interest, has cut growth guidance pretty much in half. And that's Next Era Partners. But I feel good holding Next Era Energy for the long term. Their dividend growth has been pretty spectacular for a utility, probably the best. And the next worst performer in this account's AT&T. It's one I don't feel as hot about. I almost regret buying into it, but I'm holding on to this really small position and not really doing anything with it. It gets to a point where you only have a couple $100 or something. Maybe it makes sense to just put that money somewhere else into one of these higher conviction positions, but no immediate plans to move on from AT&T. I'm also down quite a bit on Agri Realty. I'm going to link to another video at the end. It's also in the description. It talks about the top 3 real estate investment trusts in that retail sector. And Agri Realty has performed the strongest out of that group, even stronger than Realty Income over the last decade. So I'll likely continue to add a bit to this one as long as it's down this much. And I'm good with any position here being up to 5% in weight. Agri Realty, we're currently at 4.32%. Now, over the course of the year, I did sell out of one stock. I bought into Walgreens. I sold out when it was like a $30 stock, and now it's a $20 stock. So in retrospect, that was a wise decision. Let's move on to look at how this looks at diversification. Here is a sector diversification graph I built in Google Sheets. 25% of the holdings there are in those ETFs. That's a number. I feel good there, right? Then we have 13% in industrials, 10% in healthcare, and 9% in consumer staples. And my lowest are the utilities, the communication services, and consumer discretionary. That industrial sector got inflated because automatic data processing was reclassified from information technology last year to industrials a few months ago. So now we're at the 1 year point. It does kind of make sense to look at this diversification and see where I'd like to balance this out. I'm 8% on real estate. That's getting heavier than I wanted in this account because I'm also investing heavy in real estate in my Roth IRA, where it makes a little more sense because those dividends are non-qualified. But it's the opportunity I see in that industry right now that has me continuing to add, and I can focus in the other industries more in the next year and going forward. Now, I think I would like to add another consumer discretionary option as well. There are a lot of solid dividend growth stocks there. So I could probably add another one to that mix. That's something else I'll be looking at to doing here probably relatively soon. We shall see. Alright, so my favorite part of the video is showing you guys how all of this is projected to pay out over the next year. My forward annual income, as noted earlier, is over $440. I expect by year's end this is going to be over $500 as we push forward. Now, looking at the next month, we're going to be receiving about $30 in dividends for the month of October. For reference, last quarter in July, we made about $19. Then in February, May, August, November, those are my weakest months. That's just how it's going to be here. But come December, I'm expecting we're going to bring in over $75 as the majority of the positions are going to pay out again. And I've been adding to these consistently. So I'd call this a successful first year for growing a new dividend account, proof that it could be done with small, consistent contributions. And you can scale this either direction. Look, if all you can do right now, say, is $100 a week or even $100 a month, do what you can. The earlier you get started on this stuff, the better, because compounding magic takes time. I'd like to know down in the comments, what stocks will you be buying in October? What were you buying in September? Are you in real estate stocks like I've been? Also, go ahead and check out this next video where I've been comparing Realty Income, Agri Realty, and NNN REIT. These are the top 3 REITs in retail in my humble opinion. They've been hammered hard, but I think it's an overreaction. Feel free to watch and disagree. Until next time, my friends, keep investing.